Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, April 11, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We got a couple or three or five things to talk about, so might want to fire up the sticky notes. First, from a bird's eye view, we're going to take the market at face value. Above the trend line, she's bullish. Below, she's not. Yesterday, she teetered on the trend line. Today, she teetered on the trend line. Above the trend line, she's eating time off the clock in a bullish fashion from a larger picture perspective. However, on the daily chart, we still have this reversal candle from last Thursday. And while she's just inside of this reversal candle, all this is some kind of a bearish, wedgish, slop fest, chop shop formation. Guess what? Coming into an on-time type of situation. Put that on the sticky note. Above the high, it's not that close by, but above the high is the most bullish position that will obviously promote new highs. And we have another trend line that they would be headed for if that happened. Just so you're aware, that's the secondary trend line. If she stays bullish and makes new highs, that's where she's headed. Might want to draw that on your sticky note as well. Where does that trend line come from? Well, we've been watching two trend lines in the live trading room for quite a while. So let's go back to the monthly chart and I'll show you where they both come from. So the first one comes from the March of 2000 highs through the highs, and we look at this one quite frequently in here, January of 2022, and that's where we are now. That's the trend line they're playing games with now. And the secondary one goes from the high in October 2007, the high of the before the financial crisis, coming through the same point, and that trend line intersects a higher price. And on the daily chart, for example, if they were to be there tomorrow or Monday, you're looking at 531, give or take. So what can we say? Above the breakdown candle high, that high happens to be 523.87. The target becomes 531, give or take. Not same day, not in 10 minutes, but that's what the door will open for. What happens if this is just a bear flag pattern inside of the reversal candle from last Thursday? Then guess what? They're going to give up the trend line. We've got an on-time type of situation. You're going to be below, and I repeat, below the 50-period moving average. From a weekly perspective, finish the week above the trend line. There's nothing wrong with the tape. That's tomorrow's close, and they will have been eating time off the clock for 4 weeks in a row above the trend line. At face value, that's the umpire calling balls and strikes. If the downside plays out, what's the real target? Not the ultimate target, but the next real target. We've talked about it before. Let's put it on the board again and explain why. 503.50. Why is that? Well, here we are where the market ran up to this place, had a pretty nice dip only for a day, a gap lower. They tried to recover, couldn't do it. Then they gapped above everything. That creates a breakout area. This is a break up candle with a low. The low is 503.02. So between 503.50, 503.02, 503, give or take, that's an area. A can be magnetic. We'll draw a price in. C will be support. They're coming back to retest the most recent breakout area in the sequence. Why did I jump to C and skip B? To see if you'd catch it. Keep you on your toes. Don't fall asleep. So there's your bookends going into tomorrow or the beginning of next week, either way, with the spiders. Upside, downside. As you could see from the 2 points we talked about, you got point number one here, the blue trend line at 503.50. Point number two, you got the trend line at 531, give or take. Where's price? How about smack in the middle? Close enough. Below the trend line, bear case, above the trend line, bullish case, above the breakdown candle high, buller case. Anybody make money today in the live room? Let's see the posts under the video. We had plenty of traders that were trading around the trend line, buying the market around the trend line. Why? For the bounce back to or above the trend line. That's what was laid out in the morning. Little in front of the trend line, little below the trend line. Did they bounce back? Yes, they did. Here's some early thoughts. The market moved after the phony CPI or PPI, data today. You could pause the video, read the notes, go back to the chart, and double check the work. Today was the law of alternation. I think we talked about it last night. Down on CPI, up on PPI. We saw that, I think it was last time or the time before. Same routine this time. Yesterday they killed the tape on the CPI data. Today they goosed the tape on the PPI data. So let's narrow things down a little bit. Still working on things at 837. Above 515.15 opens the door for the next leg higher. That became our pivot. You'll see it noted later on. There's your pivot at 515.15, and you can see what happened. Look around the opening bell. They opened right on top of it, gave it up right away. When they went to recapture it, took them some time to work through 515.15. That was the pivot. Above is bullish, below is not. You could see how they treat the pivot. It's nice to know your numbers. We have some upside objectives above the pivot, 516.50 to 517.20, and then 518.05 to 518.55. And you could see with the afternoon rip-roar and rocket ride, they went up to and through 518.55, came back to finish below it by the end of the day. However, that was a target, among others, as long as they were above 515.15. Again, pause the video, go back to the chart, and double-check the work. 515.15 is the gateway to higher. That's again at 9 o'clock. If you don't have this information starting the trading day and throughout the trading day, ask yourself if you think you could use information like this to help you with your trading. Pause them, read them, go back to the chart to double-check the work. Let's say in case of a shakeout operation, remember the trend line today comes in around 513.55. Expect the bull-bear battle if reached sooner than later. Okay, fair enough. This is all before the market even opens. There's 513.55 right on top of the trend line. Let's get rid of the line so we can see the trend line better. They spiked the trend line. They rallied back to it, spent some time eating their way through it, eating time off the clock, and then boom. Once they were above it, back to the pivot, 515.15, and that was it for the rest of the day. Plenty of traders long from around the trend line. As we open the market up, and you can see here that 937, I'm saying here, 514.16 down to 513.50, give or take, is a support zone where they should bounce the tape. We look for a base hit. It's a scalp with potential. Our scalps are 5 to 7 S&P points, 50 to 70 SPY cents. That's our minimum required base hit. We like to pile up the base hits, never knowing which ones can give us the doubles, triples, rocket rides, Whopper Juniors, and so on. Like yesterday, 514.16. As you can see here, may not seem like much, but they came into the numbers, spiked it by a couple of pennies. The low was 514.09. They ripped it back up in the other direction. High was 515, almost getting back to the pivot, but that is the trade. They gave you 7, 8, 9 points out of it. That's the idea. That's the base hit. They came back down, but we book a base hit. We don't let the rest go bad on us, and then we're lower into the trend line. Secondary situation. We'll call it a play it again, Sam. That's what we call it in the live room and inside the numbers. Play it again, Sam, when we get another trade, when the market, for example, goes lower. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here, everything you need to be successful trading the S&P, whatever vehicle you're using, futures, options on futures, exchange-traded products. It doesn't make any difference. Why do I show you the Q chart intraday? Because we had traders in the Qs. What I do is I put up in the live room the numbers on the Qs, the numbers on the IWM, numbers on tons of stocks, numbers on the SMH, numbers on the XLF, all that stuff. We'll put up anything anyone wants to look at. We have the numbers across the board. This was today's number early on and a resistance number for the Qs, and we had traders that took a short at 440 and a quarter and summarily got paid handsomely really, really quickly. We've got, as we like to say, something for everybody. Here's one that came up in the live room this morning. What's the intraday level on XLF? 40.48. They spiked it, ripped it back up in the other direction, gave you the minimum required base hit from a day trading, scalp trading, intraday perspective. Around 1%. They gave you 40 cents, 40 some odd cents. That's the number. Funny how that works. About Google, I know we're deviating a little bit, but we'll get back on track. Google, the reason I bring this one up, in the live room, we had some traders long Google. The question comes up, hey, what's my target in Google? Very difficult. They're at new highs. What's a target in Google if they make a new high? What did I tell them? I said, well, the next logical place is 160. Sometimes they come up short. Other times they spike them through, and 160 was up there. They came up about 30 some odd cents short, but nevertheless, doesn't mean they won't get there tomorrow. But we had traders riding the wave in Google, got paid accordingly. There's something for everybody. What's going on over in Camp IWM? Well, we had two numbers that we were eyeballing for quite some time, 202.15 and 200.15. And guess what? They hit them both. They're contained within them both. Quite interesting. So they're eating time off the clock in this range. Above one, she's bullish. Below the other, she's not. It's that simple. Above 202.15, she can start working her way up to close this gap up here. A little bit of relative weakness on the chart. When you compare this to the SPY, you could see they already filled that gap up here. The same gap, the same relative basis gap. The closing price, 519.32. Today's high, 519.48. They filled that gap. And you can see there's relative weakness or a divergence in the chart of IWM, my favorite, and I repeat, favorite market-leading indicator. Below 200 or below this low, which is a little bit below 200, look out below. How about the transports? Look like a nice big up day, up 145 points on the transports, about 1%. But what did they do? They're an inside day to yesterday's candle. That doesn't mean anything. What does mean something? Only thing in the bull case that means something is if they can get back above the convergence of moving averages, the 20 and the 50 up here, and the breakdown candle high at 15,846.85. In the trading parlance, it's spot 85. Without that, they could eat time off the clock. They can go right back down until or unless you get above the high of the breakdown candle. This is bearish. Lower prices are to be expected until or unless they get back above here. We treat each chart independent of one another. We take the market at face value. It will be a very important closing to the week for the transports. Do they close the week back below the 20-period moving average, or have they just tested it and they close back above? The trend is your friend. Is the trend turning? Not turned, turning, I-N-G in italics, turning. We'll find out more information at the end of the week, Friday's close. What's going on with the Q people? Up $7, 1.5% today. Pretty good day. As it relates to last Thursday's reversal candle, consider where the spiders are. They're not really there yet, but look where the Qs are. Are they going to immediately get above this candle? The high is 446.95. That's your bogey. Above the high of the breakdown candle, and they're likely making new highs in short order. If they're doing that, what do you think the spiders are doing simultaneously? It's all about Thursday's reversal candle. If they reverse the reversal candle, look out above. Not just in the Qs, but across the board. The financials, XLF, we looked at that. They were basically down 30 cents today. Into the 50-period moving average, also that number. Interesting spot. If they don't hold it, look out below. There's another leg lower coming. This is, however, an on-time type of situation for the XLF. Could be working on a full stack situation. What do we talk about? All charts. Home base. What's home base? The 20-period moving average. You go to the weekly chart, and then you remember what we talk about multiple times a week. She never likes to get too far from home base. She'll always come back toward home base, give home base a chance to creep up to price, go sideways for a while, a combination of both. And here you go, working their way back toward home base. Doesn't have to get to home base, just working off some of the quote, extended / overbought condition. You know, the one there's no true measurement for. That's why whenever we say overbought condition, we have to use air quotes. What about smash mouth? Still staying in this box. Is this a bullish box or a bearish box? It's bearish if it's a move down from the high, eating time off the clock inside the breakdown candle. However, it's bullish, the move up from the low, eating time off the clock, building energy to go run a test of the breakdown candle high. Nothing's changed. Look how long they're doing this. Mrs. Market, in terms of the SMH, will make a decision relatively soon. It's all the same market. If she's going to make new highs, everything else will likely be making new highs as well. If she's going to break down, it's below 213.35. Look out below. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.